Stock market analysis and projections on the S&P 500. This is, I think, analysis that you're really going to enjoy. But before we do that, make sure you read this slide. This tells you about our approach to the market and important information about you using what we share and the important aspect of trade ownership. You must own your own trade. No matter who says what, no matter where you get the information from, you have to be responsible for putting the trade on and taking it off based on it fitting into the rules that you have for your own trading plan. Just 3 days to go for our cycle analysis workshop special. Learn the askSlim method of analysis developed over 50 years. It took 2 years to write this and over 6 months to produce it. There are 24 video modules plus many other tools for text videos out of our library. This is an online lifetime access, so there's no special platform required, and you will never look at charts the same as you did before. Improve your directional decisions and project in time and price. And we have bonus items in here, and that includes a complimentary ticket to my workshop that I do about every 2 months. That's behind the cycle analysis curtain. It has a $495 value, and also you're going to see many of our addendums that we've added in here. So there's so much to learn. This is a special $400 discount, just $897 for this amazing workshop. And if you're a level 4 member or you become one, you get an extra $100 discount. You just write to Matt at askSlim.com and he will give you that discount if you're a level 4 member. Anybody else, please go to the askSlim.com front page, go up and click on the cycle analysis workshop. There's a free video there, a whole list of all of the modules that are in there, and a lot for you to learn about this workshop. Learn the method that we use, I and my whole team, to analyze charts, analyze so many different markets that we look at, and you'll be able to really understand the work we're doing and learn to do it all on your own. Projecting in both price and time, which is just a very unusual way to be able to look at charts. So you're going to just love this. Please do go to askSlim.com, top of that website, and do take a look. All right, trade ideas. I want to show you this first because RV does great analysis here in MDY, and I thought this was very important to the analysis of the overall stock market, because we saw in this rotational market that bids are coming into the small caps and mid caps, and he brings analysis in here on this trade idea on the mid caps. And if they stay strong, it's hard to see much downside in the market. You could get some corrective periods, but they will probably be shallow because bids do come into when one group gets sold, then another group gets a bid, and that's the nature of rotational market, and that's what we've seen here, and that's certainly what has kept the market strong. So we'll start out with RV showing you this analysis.
This is an askSlim trade idea video walkthrough for a short-term long in the S&P Midcap 400 or the MDY. What I like about this pattern is that we are still in this intermediate-term rising phase. You can see that our weekly RS has been positive for many months here, has been holding up. This has been a leader in the market. You will note that first we had that retest of the breakout right here, and you had another one just now, and we are holding here and trying to turn back to the upside. There are good odds of a move through that old swing high at 609.69. If that were to happen, there's a 161.8 at around 623. That is my overall intermediate term target for this move to the upside. The next trough is due around the later part of March into the April time period. Hop over to the daily chart. Now, this is a very bullish pattern here in the MDY. If we look at this longer dominant pattern, this is a bullish right hand translation. We were looking for a flag to form. I was looking for it to hold this zone here, 579 to 569 or so. It just got close to that and has now turned back to the upside, obviously. We also did get a bullish signal here on the PO, indicating that the odds are favoring a follow through back in the upside in the direction of that trend. That trend is pointed up, so we are seeing some follow through now here in the MDY. what I'm looking for this idea is that we have a zone from 597 to right around 591.50. I would love to see this just hold tight for a few bars here on the 2-hour, and then look for a turn back to the upside into the targets that I've highlighted here from 611.63 up to 621.11, and then all the way up to 630.59 if it wants to head up there. If this loses 584.66, that would invalidate this idea. Again, this is the higher low that formed versus that key, what looks like a cycle low now in the MDYs. So that risk on this trade idea is right around $12 or so. I'm targeting a move of close to 15 as the base case target, and then up to around 23. Okay, so that's the overall layout here, the logic, along with what I will be watching for in terms of that price action in the MDY. And keep in mind, all of this was done using the askSlim cycle analysis methodology. We have a special going on in the workshop. This is our best price of the year. So if you want to learn how to do this type of work on your own, take that workshop and you can learn how to be able to actually forecast in terms of both time and price, both on the upside and downside. And as always, if you have any questions, feel free to reach out. Thanks again, and hope you guys have a great day.
All right, as you can see, that was showing a market that is showing a lot of strength, and the mid caps getting a bid and looking like they're going to stay strong. That certainly will, if that's true, that will keep the bids coming in the market, keep the clients shallow. And if that analysis fails and we break through the supports in MDY, that will be significant to the analysis also. So I wanted you to see that. I just thought that was very important to see. So the question is, which stocks are the stocks that you would be buying or you'd be selling? Let's just look at our ranking systems before we get into the rest of the analysis. This is askSlim rankings, and what this does is it takes the top weighted stocks and ETFs and puts in our algorithms, long-term, intermediate term, short-term, and then what it does is it gives us an outlook for 3 to 6 weeks. This is for levels 3 and 4. So if you want to become a level 3 or 4 member, you can get this application. And you can see it's listed here alphabetically. So what I thought we would do is kind of look at the directional bias, as you can see in here, since we're a rotational market, and you'll be able to see which are the strongest stocks, which are the weakest. You could actually do it on short-term, intermediate, and long-term. Also, we'll take a look at that in a moment. But let's look at the directional bias in here, and we'll switch to the very bearish stocks, as you can see. So this is stocks and futures, and look at AMD, that became bearish in here. Baidu, which is reflective of the China stocks. Uber, which we have been showing as negative. Heating oil as bearish. Wheat is bearish. So that gives you an idea that commodities are in here also. I'll just scroll down in here, and you'll be able to see the rest of these that are bearish. Wheat is bearish. Applied Materials is now slightly bearish. Boeing, slightly bearish. BABA, First Solar, LVS, McDonald's, all of those are slightly bearish, as you can see. And I'm going to keep going down. So you see Wynn Resorts, XLP, EEM, that's emerging markets, of course, and that's weighted also by FXI, which is China. FEZ, so there's the European stocks we've been showing as negative at the same time while our stock market's been going up. And if you watch the beginning of the show, I showed you that disparity between the world markets and the U.S. market, which is really at an extreme. So you have copper as slightly bearish right there. Let's keep going down until we get out of the slightly bearish ones right there. And there we go. So we have platinum slightly bearish, gasoline, the euro, which I believe is getting ready to bottom right there, and the bond right over there. This is the 10-year, and soybeans. So you can see in there, those are the ones that are slightly bearish, and likely money to keep flowing out of those. Now let's switch this over and look at the bearish to the bullish to very bullish, and you can see in here XRT, RUT. So the Russell is very bullish when we look at that, and that's part of what we're seeing in this rotation, where the small caps and mid caps are getting the bid. So Costco, CRM, Deere, FDX, Goldman Sachs, those are all bullish. Let's go down here and see which other ones are bullish. JP Morgan. So you see Goldman Sachs, JP Morgan, Morgan Stanley. Those are all the very bullish ones. Now look what's coming up here. Netflix, bullish but overbought. Where did that come from? Well, you can see in here our OBI is P1. This says it's positive at an extreme. In other words, the positive movement says pending a reversal, so the short-term reversal very likely to come. This is for aggressive traders if they want to get onto the short side of something that's strong. And you can see in here, Square is giving you the same signal right over there. Bullish but overbought. So you have on the bullish side NVIDIA, Oracle, PayPal, Timas, Tesla is bullish, as you can see. And we'll just come down here, UAL, Visa, Walmart, Exxon, XLE. So in other words, the energy stocks are bullish but overbought. So you can see that right there as you get the P1. That's really great information on the OBI. XLF bullish, XLI bullish, really great information. XLK, SPX. So SPX is bullish now, but what I showed you is RUT is very bullish. So it's picking up in there a slight difference. NASDAQ, of course, is bullish. Natural gas bullish, overbought. That's already reversing today. Bitcoin bullish and overbought. It hasn't really started to reverse yet as it got up and tickled 100,000. But now it's trading at 99,000, not down very much from there, as you can see. So one more I'll show you down over here. Disney is slightly bullish, and that's a P1. That says the OBI says this is likely to have a short-term reversal. This is fantastic. You can get the weekly chart or the daily chart right there, and that's updated regularly by us for level 3 and level 4 members. And if you want to look at what's the strongest and weakest short term, you just click on that and you see short term. It'll give you the weakest right over there, short term the strongest right over there. This is a fantastic application for you to use, and you can just get a great idea how to use that. So I wanted to go over that. I thought it was really important to look at that. As RV shows you these mid caps that were very strong, to get an idea in this rotational market which ones you would be looking to be expecting to go up, or which ones that you would expecting to move to the downside. All right, so now let's actually get into the chart analysis for the S&P 500. Now that we've looked at the group conditions, let's look at the broad market. And I'm going to show you the SPY, and I'm going to show you a 2-hour chart that I put together that combines all of the analysis in one place, which I think you're going to find extremely interesting. So let's open up the daily chart here. The weekly chart remains a little bit confusing for us. So we're going to look first at the daily chart that you can see. And this is showing us the upward trend that the market's been in. And what's very important to see here is that each of these cycles in here are very close in length, as you can see right in there. And make sure that you do take a look at our workshop area, and we're running that special right now where you could save $400 or $500 on the workshop where we teach how to do this analysis. So here's this cycle, and you can see it's a positively configured cycle, which translated to the right side, the peak way on the right side. That doesn't leave much time for a decline, and you can see it did that here. Here it was so strong, it only made a rectangle. Where's the strength coming from? Well, it's coming from the longer term time frames that's on the weekly, where the momentum has remained on the positive side, and I'll show you that. Here you could see the OBI on the bottom as it goes from positive to neutral back to positive, and that tells you bias your option positions to the long side. and positive, and this is where we had that 3% decline that got me a little confused on the intermediate chart. And then this next big up move right over here that happened post-election, and that reversal right over there that we saw, that island reversal that I still believe is important, calling a top area right there. So where are we right now? Well, positive cycle, positive cycle, positive cycle. That didn't get below that low, and each one of them making a higher high, and that puts you in this uptrend. Now you can see we're getting into this period right over here. Now, if there's a intermediate pressure going to come in on the downside, you'd expect to get, this pretty good sized decline in here, which would take you down under 560, maybe down to 555. If this is going to remain positive right over there, then you probably only get into this support zone somewhere around 584, maybe down to 580 here. And this takes you out to the first week of December. And that's what we've been looking at, is this decline, this pullback in here into the first week of December, originally looking for it to be much more steep. But the market is telling us that it's not in a condition to move down that steeply right now. Now, what I'm going to do is I'm going to look at first of all, we'll look at the momentum conditions. And this is the daily momentum. And you can see on the bottom here, the daily slim ribbon PO, when it gives you these upward resumption signals for momentum, how good that is. You got one right over here. And of course, the market moved up right here as that happened. And this has all still been positive. Now, if I go to the weekly chart, I'm going to go there quickly, and you can see our momentum right in here has been positive also. So this is what's driving the upward movement in the market on the daily chart and on the intraday charts, as we see. Now, we were looking for a corrective period into here, and it was only 3%. The question is that the Russell looks like it made its corrective period here, where the S&P fell 6%. And either you're getting pushed up by the Russell cycle right there, or this beginning of this new cycle, which would be very early up in the SPY, the S&P 500. Any way you look at it, this is massive strength. And this is showing you that the market, which is getting a lot of help from this rotation, isn't willing to give any ground on the downside yet whatsoever. So if I want to put all this analysis together, I'm going to do that on the 2-hour chart. So the strength that we see here on the 2-hour, on the weekly chart, is upward momentum. The strength that we see here on the OBI right over there shows you the upward where you should be putting alongside bias in your position. So that's still showing you strength in there. But my question is, did this cycle make the trough on the weekly chart, or is this yet to come? And we'll know that by how steep this is right there coming up over these next couple weeks. Could get a sizable decline in there in the next couple weeks, but it's going to be helped by this upward momentum. Here is the 2-hour chart that you see right over here. So I wanted you to look at it without any of that analysis on it. Now what I'm going to do is I'm going to bring in all of that analysis that I just showed you, and that is right here. Now look at this amazing chart. As you can see, up on the top is that weekly momentum that I just showed you. And on the bottom in here is the daily momentum that I just showed you. And these are the cycle formations here on the 2-hour chart as they are on the weekly. So you can see that this is your corrective periods right in here on this 2-hour chart. And each of those, as you got into these areas right here, brought you sell-offs in the SPY. So you could just multiply these by 10 and you get an idea. This was 44 points here, 54 points from the high. So that's, let's just say 550 points in the S&P 500 from the high. 25 points in the SPY decline here, only a 10 point in this rectangular correction there, and right over here a 16 point or 160 points in the S&P 500. And look where we are right now. Market's still showing you strength. Now, let's put together all of the analysis. First of all, on the bottom over here, you have the market condition indicator. Every time it gets under the positive 25 and back over it, it gives you a positive signal. It did it in this cycle. cycle, it did it in this cycle. The Hurst was so strong it couldn't even tick down, and it did it again in this cycle. So that gives you that great information of the conditions in the market. Let's look here. You see here it was green and strong on the weekly momentum conditions. When it turned red here, and it turned red on the daily, look what it set up. It set up that bigger decline that you had right over here. Here you had positive weekly, positive daily, so it gave you less of a decline. Positive weekly, positive daily, far less of a decline. Right over here you had positive weekly and neutral daily, so it gave you a little bit more of a decline. And right now the conditions are right over here, positive daily, positive weekly. So unless these turn red, this will be a shallow decline. If these do give you the negative signals right over here, weekly turn red, daily turn red, then there's the possibility of a much stronger declining trough into this early December period. So you could see how beautiful this puts all of the information in the chart for you all in one place. The other thing I didn't mention was the intraday momentum, which can be seen right in here. And it actually turned negative right over here, but then neutralized and turned positive again right there. So the market is showing you all of this strength that is coming in each of these corrective periods, here and here and right over here and right over here. The intraday did turn red, and that's what you're going to see first. You'll see the slim ribbon PO turn red right in here, and that will be the very first sign, and that will happen before the daily turns red, and it'll happen before the weekly turns red. If they're all red at the same time, like you got right over here, you get the biggest declines. So this just does a beautiful, beautiful job of telling you what the conditions are in the market, what the cycle formations are. It shows you the configurations. It shows you the translations. It gives all of that to you. I constructed this chart manually. So any of my level 4 members are asking for this chart. This is not something I update regularly. This is something I keep in my mind and see it this way, but I thought I would put it out there because it gives you the great visual. Coming up right over here, this corrective period, very likely that this island reversal right there is telling you that 600 is going to be the peak of this cycle, and at some point here it does turn down. If it tickles this out, it really won't matter to me as much as getting how it acts when it gets into this corrective period. You can see that S&P 500 under the very most strongest conditions only gives up about 100 points. It could give up anywhere between 150 and 500 points on the downside during these next couple weeks. The probability of rallying during this period, well, you can look at it, it's pretty small. The probability of a correction, pretty high. The probability of it being real steep, well, unless these momentum conditions turn red, it's not going to be very steep, and this really will give really a great, great picture to what we're looking at. So again, we looked at the weekly momentum in here. We put that on the 2-hour chart. We looked at the daily momentum and the cycle configurations, put that on the 2-hour chart. We looked at the daily momentum. We put that on the 2-hour chart, and that's how we got to this. All of that information showing at one time, and the likely that there will be some kind of a correction coming up in the stock market over these next couple weeks. Again, anywhere between 100 points on the S&Ps and 500 points on the S&Ps, I don't really know, because the weekly pattern that we looked for a sizable correction did not develop into that. And there's just so much strength in the market, it's hard to call anything but a temporary move to the downside into early December, and then probably strength again moving into late part of December and into the beginning of next year. In the beginning of the show, I mentioned that our long-term projection was that the bull market would peak in the first quarter of 2025. I still think that's the case, and you'll be able to see that if you're a level 1 to 4 member. I'm going to bring my big picture analysis on the major markets at the end of December, and you'll be able to watch that.